This week, here's why an 8% 30-year fixed rate may in fact be good news for reverse mortgage lenders.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. In today's financial landscape, we find that both the average HECM expected rate and the 30-year fixed rate mortgage are hovering around 8%. In today's episode, we'll delve into why that convergence may offer a distinct advantage to reverse mortgage lenders despite the high rates. According to Money.com, predicting whether these interest rates will rise above or stay at 8% is uncertain due to numerous influencing factors. Chen Zhao, economics research lead at Redfin, suggests that the possibility of rates reaching or surpassing 8% is well within the realm of possibility, and that's potentially unsettling news for prospective home buyers and sellers alike. Well, I have news. That time has already come. In the past month, individuals with average credit and smaller down payments have already secured mortgages with rates as high as 8 or even 9%. Now, you may wonder how record high mortgage rates could possibly benefit a reverse mortgage lender. Well, firstly, over the past decade, the HECM's initial expected rate and ongoing rates have surpassed those of traditional mortgage loans. And that discrepancy reinforced the belief that reverse mortgages were the more costly or extremely expensive loan. However, due to the recent surge in 30-year fixed-rate mortgages, the HECM now stands on a nearly level playing field. And secondly, prospective home buyers tend to focus on interest rates. With the average 30-year mortgage now at 8%, older home buyers may be more open to using a HECM for purchase or H4P to transition or right size into a new home. Now, while the H4P does demand a significantly larger down payment, it does offer several distinct advantages, albeit with a caveat of upfront and also ongoing mortgage insurance premiums. And these advantages include the ability to avoid tying up a substantial portion of their liquid assets in the new property, and the flexibility to choose when to make payments or even skip them based on unforeseen circumstances or immediate financial needs. And this helps prevent that home buyer from falling behind on essential mortgage payments, and that safeguards their credit score and their future borrowing capacity for auto loans, credit cards, or other finance purchases. Despite home values today being still 25 to 40% higher in most markets than pre-pandemic levels, the interest in cash-out refinances has contracted. Now, few are inclined to refinance their home for a cash-out option and then double their interest rate and monthly payments just to tap into their equity. And this makes the HECM's line of credit or a proprietary second reverse mortgage appealing to the budget-conscious borrower, as it doesn't inflate their monthly debt obligations or payments. And given the Federal Reserve's vigilant stance on inflation and potential future interest rate hikes, it's probable that the traditional mortgage rates will remain elevated well into next year. Now, while these higher rates certainly shrink the available loan proceeds for reverse mortgage borrowers, the elimination of the interest rate gap between traditional and reverse mortgages could alleviate some resistance to both the HECM and proprietary and H4P loans. In the grand scheme of things, as one Normla Attendley aptly put it, it's just a loan. The distinction lies in one not requiring monthly payments and potentially securing a credit line impervious to freezing or being reduced. Now, what are your thoughts? Despite the lower principal limit factors, what advantages do you see with the traditional and reverse mortgage interest rates being nearly identical? Please share those in the comment section below. And if you would share this video on LinkedIn, we appreciate those of you who are doing that each week. Don't forget, we have a YouTube channel where you can subscribe and hit that like button if you would. It really helps improve our suggestions in YouTube and the rankings in the algorithm. Thank you for that. And don't forget, each and every week we bring you the reverse mortgage news, both in audio and video. That is HECM World Weekly. Apple users can subscribe on Apple Music, and also we're now on Spotify, Podbean, and of course, here at HECM World. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis that you'll only find here at HECM World. Have a great week.